Hey everybody, thanks for joining me today. My name is Justin. Today I want to talk about Mohnish Pabrai and Lee Lu. These are two investors I closely follow that I have a lot of respect for. And in this video, I want to take a look at their current portfolio. They just came out here in the last week and what their current positions are. So I want to discuss what those current positions are, the changes that were made in quarter two, and any surprises, because I think there were surprises on both end, at least surprised me, that I saw or didn't see in both of their portfolios. And we're also going to kind of talk about how both of their strategies have changed over the years. And I actually think they have similar strategies right now versus what they had gone through before. So let's just jump right into this. All right. So let's first look at Lee Lu and kind of where his mind is as far as investing goes and what his strategy is before we take a look at his portfolio. And this is an article from Guru Focus. And this is what Lee Lu had to say. He says, truly good businesses are those that can fend off competitors, the ones that can have enduring competitive advantage and hopefully also have a long runway for continuous growth. Those are the businesses we are looking for. They come really in all different industries and all different shapes and forms, but they are really, really rare. If you're really lucky enough to find one of these long-term compounders, all you need to do is hold them for the longest amount of time. So interesting. So he's looking for companies that have really strong moats, competitive advantages, that he can buy and then hold for a long time. Now, Mohnish Pabrai, this is an article from Yahoo Finance, and this is kind of what he had to say. So I'm not going to go through the entire thing. I'm just going to take out a couple snippets out of here. But he says, very few businesses have the qualities that can help them grow year after year. So it makes sense to hold on to the ones that do. Capitalism is destructive and very brutal. It can keep challenging to keep up with businesses and to figure out what is around the corner. Adapting this mindset shift changes the nature of businesses one should and interested in owning. He went on to add, they need to have strong moats, long runways, and great management. All right. And then he kind of goes on and talks about Snowflake, how it really doesn't make a whole lot of sense to invest in just because what you're buying right now, they'd have to grow tremendously on the future. It just doesn't make any sense. And he says for companies like Snowflake, which are trading 20 times revenue or more, it would take vast amount of growth to produce high returns in the years ahead. That's if these valuations made sense. At 20 times revenue, it would take 20 years for the company to earn investors' money back, and that's assuming no research and development, no cost of sales, no costs at all. That's not to say these businesses won't grow or that they are not high quality. They may earn high returns on capital and achieve high growth rates in the future, but that's not the point. The point in Pabrai's opinion is that the market is now factoring in such unrealistic growth prospects it has become virtually impossible for these businesses to grow into their valuations. Thus, the definitions of what qualities or qualifies as value and growth investing have changed, with the overvalued stock still qualifying as neither. So what I get from this, and what this is similar, I think, to Lee Lu, is that Mohnish Pabrai is looking for companies that have a competitive advantage, have growth you can buy into, and that they can grow for a long time, but also be able to buy at a good, reasonable valuation, whether it's fairly valued or undervalued, and just let it run. So for me personally, this is something I'm trying to get to. A lot of companies in my portfolio are companies I would consider value companies or value investing, where I may only own them for 3 years because they've gone through an event, kind of similar to what Phil Town does. And so I'm trying to shift my mindset, like Lee Lu and Monish Pabrai, to buy companies that have a long runway, like Alibaba, Dropbox, for example, Sprouts, things like that. All right. So let's go take a look at Lee Lu's portfolio right now, and this is right off Dataroma. This is a free website that you can go to, look at super investors, see their portfolio, see the activity done. Here's his current portfolio. He only owns 6 stocks. So I love following or not companies, but people that have, you know, a concentrated portfolio, less than 10 stocks, they have very high conviction on, and that they believe they're going to do very, very well. Because I do believe if you have high conviction stocks, the chances that you're going to hang on to those stocks is very, very high. And so Micron is his biggest position, almost 50% of his portfolio. Bank of America, 25%, Google, 10%, Facebook, 9%, Apple, 5%, Pinduoduo, 2%. Now, these are based off the American stock exchanges. So he may have other investments around the world that are not part of this. Is just basically his kind of American portfolio that we can see. We'll see the same thing for Mohnish Pabrai here in a second. But if we take a look at activity in this last quarter, this was a bit surprising. So he didn't have anything for quarter 2 at all that went on. So he had Facebook in quarter 1, they sold some off of. He reduced his position entirely. He sold out of that, but nothing in quarter 2. And so the surprising thing to me is, with, he has a close relationship to Charlie Munger. As far as we understand, that Charlie Munger has had multiple conversations with Li Lu, and Li Lu is considered like the Warren Buffett of China. Just has an incredible business mind, incredible investment mind. Charlie Munger has a lot of respect for Li Lu, and Li Lu has been high on Alibaba, and that was kind of the reason why Charlie Munger, among other things, may have bought into Alibaba. So seeing Li Lu not buying into Alibaba was a bit surprising for me. Now, he does own Pinduoduo, PDD, which I also own a small position of. This is a direct competitor of Alibaba in Chinese e-commerce. So you kind of have JD.com, Pinduoduo, and Alibaba is the big giants in China for e-commerce. Pinduoduo has only been around since 2015, and they're growing really fast. I mean, I think they're going to overtake JD.com here in the next 3 to 5 years. Now, they have a very, very different business model than JD.com. JD.com is probably the closest to Amazon that China has. They have 1,800 distributors across the entire country, whether JD.com owns it or their third party owns those distributors, but they're all over the place. They're very small margins. Pinduoduo is kind of described as kind of a Costco slash Disneyland experience, where you go on and they really promote group buying. So they're trying to get groups together, buying a lot of stuff at the same time to save money and get those savings passed on to the customer themselves. The unique thing about Pinduoduo is their business model. So when you go on there, you can actually play games. There's a social aspect to it. And also they get all the money up front. So their free cash flow is tremendous, and they don't have to pay their vendors until later on. So they have huge positive free cash flows, even though they haven't had earnings. But they're getting closer and closer to profitability. It should happen by next year, my personal opinion. But I was a bit surprised seeing Alibaba not on there. But again, he has Pinduoduo, so maybe that's why, or maybe he's waiting for Baba to drop below that. Now, I will also say that he did at one time own Alibaba, but he sold out. I think it was last year, if we take a look. Yeah, so he sold out in quarter 2 of last year. So, maybe he's done with Alibaba. I don't know. But that's kind of where things stand with him. Now let's go take a look at Mohnish Pabrai and see where he is at. All right. So down here we go. Pabrai Investments, and he has a very concentrated portfolio. Again, these are just on the American Stock Exchange. So he does have some other companies that he owns outside, including in Japan, I think Turkey as well, India. But he's got 3 here in the American Stock Exchange. So he's got Micron as well, which is almost half. Ironically, virtually the same percentage for portfolio as Li Lu, basically about 50%. Seritage, 31%, then Alibaba, 21%. Now, as far as activity in the second quarter, he increased his Alibaba position. So he added 89,000 shares of Alibaba. So I'm not surprised that he added Alibaba. It wouldn't surprise me if he continues to add Alibaba. Now, he has sold Micron to take on Alibaba. What does surprise me, though, is that Mohnish Pabrai has talked about in recent interviews on Some Zero and some of the business schools as well that he is very high on Tencent. Tencent is a huge conglomerate out in China. They kind of remind me a little bit of Berkshire, where they own over 700 parts of 700 companies around the world. They have a big global footprint because of that. They're also, in music and a lot of WeChat and other things that are going on in China. And so I expected him to have some kind of position in Tencent, whether directly in Tencent or in Naspers or Prosus, and we're not seeing that. So surprising. That really did surprise me overall. Maybe we'll see that in the future. I don't know, but that was surprising to me overall. So that's kind of where their portfolios are right now. I plan to cover other gurus as well, as far as like Michael Burry, Bill Ackman, and some of those others. So these are content you guys like. I encourage you to subscribe to my channel. They got some value added. Please smash that thumbs up button. Helps out the channel a lot. I love to hear from you guys in the comment section. What do you think about these changes in their portfolios? Are you surprised that you didn't see Alibaba and Li Lu's portfolio? Are you surprised you didn't see Tencent and Pabrai's portfolio? I'd love to hear from you guys. Thank you so much for watching. I'll catch you guys on the other side. Take care and God bless.